Thank you for your time on the show today, Ayodeji. Interesting decision we're seeing today coming from the MPC. Some would say it was largely expected. But for you, though, what does this portend for the capital markets going forward?
Yes, interestingly, if we look at the fixed income market, for most of the dealers, we're anticipating that there will be a shift or a raise in the MPR, but it's in line with our expectation. So we believe that what this has effectively done is to provide some form of clarity. So for traders, for fund managers, they're anticipating that maybe there will be an increase in the MPR. This meeting has further reinforces CBN's growth agenda to ensure that lending rates it comes to a reasonable level, and also the interest rate environment still remain very low. So what we believe, or what we think would see, is that for most of the fund managers that have been skeptical, or that there's been some form of uncertainty within the market, we may begin to see them making a move. You will notice that within the fixed income space, activities has been very low. You see just pockets of transactions on a daily basis since December. So that's for the fixed income market, provide that clarity. And for the equities market, I think it's positive because with interest rate environment still remain low, we believe that on a dividend yield basis, for most investors will still be patronizing, especially domestic investors, the equities market. So we believe that that will sustain the momentum that we're seeing in the equities market as we await the full year result and declaration of corporate action from the banks or from the companies entirely.
All right, a part of what came out from the NPC's decision today, talking about when the central bank was making an announcement, was the fact that he mentioned the fact that the NPC advised the government not to go on a total lockdown. Talking about dealing with uncertainties, because we know the second wave of the COVID-19 pandemic in Nigeria has been raising those concerns on the possibility of whether we might see an action from the government in the near future. But for you, though, what does this do to calm the nerves in the market?
Yes, I think I fully align with the CBN on this because we know the impact. Our economy, when you look at how our economy is structured, most of Nigerians live on daily earnings. And so a total lockdown or a lockdown would have more devastating impact on the economy. And like he put it, the gains that reversing some of the gains that we've made in the past few months. So I believe it's for government to intensify effort on creating that awareness on to reduce the transmission rates. And also, as we await, government has said that by February we may begin to get the vaccine. So we believe that with that will create some form of clarity even within the economy, and we may begin to maybe from second half from second quarter rather, or the third quarter, we should move into the positive region. Second quarter, based on because of the low base effect, we may maybe close marginally almost at a zero level, while we believe that from the third quarter we should move to the positive region. And by then, CBN may begin to change their stance regarding the interest rate environment, and we may begin to see a gradual hike by that time. But I think for now, we think that a total lockdown would be more devastating, and government shouldn't consider that.
All right, and finally, we've seen some earnings trickle in, and also looking at the performance in the markets today, NSE All-Share Index up 1.2% today. Also, we saw a huge decline in the NSE Oil and Gas Index. From your point of view, what do you see playing out there?
Yes, I think largely we would continue to see interest from domestic investors, and they have currently in the past few months dominated the market. So that would even reduce the kind of volatility that we see when foreign investors are also trying to exit this market. Yes, we're expecting that as we progress, well, as soon as CBN also supplies more FX, we may see some of the foreign investors also trying to repatriate their funds. But with the local capacity, as long as interest rate remains very low, so we believe that there will continue to be interest. Within the oil and gas space, we believe that what we saw today is just like profit taking from some of the investors that are maybe just trying, they need proceeds of their fund. We don't see that trend sustaining for long, because when you also look at where oil prices in the global market is currently, it's above $50 per barrel, which should also be positive for, especially for those that are playing within the upstream space. And for the downstream space, we are hoping that government would be able to um, fully deregulate that space, and would be able to see a more market reflective rate within that space, which would also boost businesses within that sector.